All right, guys. So seems to be a lot of confusion back and forth with this strategy. I've been reading through the threads, and I want to try to help out and get some answers for myself, actually, because I'm quite confused as well. So we're using the NQ 5 minute right here, and I just want to get some questions answered and hopefully help out anyone who may also have these questions. So this is today. Of course, it was a tremendous trend day today, starting from this morning. 6:30, basically straight up. But using this strategy, first and foremost, the gentleman R. I can't really see his full name right here, but as I'm looking at the Discord, but this I think that once this can be understood properly by most, this strategy is, at least from what I've been looking at, I haven't taken any trades in 5 days. I've solely been looking at this strategy on multiple time frames. Um, I like the 5 minute, but I also like confirmation from the 15. And then over here, as I drag this over, you'll see I got the 4 hour. I'm using this mainly for like order blocks and stuff like that, trend lines, patterns, the whole 9 yards, premium discount zones, blah 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 blah. I'm just trying to get an idea of where we're going, but I'm mainly trading off the 5 minute. So let's dive into this and get some questions answered. Hopefully, you guys can all help out. So we're gonna start here with an arrow, and we're first gonna put an arrow right here, and then we're gonna basically put an arrow right here, because on this setup right here, we basically have two breaker structures, COCHs. So first one, it looks as if it would be right here. Now, of course, with this strategy, it always seems like you're looking what's behind you to get ahead of you, right? So I think my question and confusion is coming in is when are we looking for longs and when are we looking for shorts? So based upon this right here, now if we just take our fibs, and of course we draw, so of course this move occurs, right? So 5 minute time frame. This move is now occurring down. We break structure right here, and then we basically have change of character right here. So, you're not seeing where this is, of course, ending up, or where our change is going to occur. But you have your fib drawn basically from like right here and then down. So say this is your low point right here. So I'm presuming, and maybe clear the air here, once we of course get our change of characters or break of structures, downside or upside. So when you get them downside, you're looking for a reversal. And then when you get them upside, you're looking for a reversal down. So in order to catch, of course, this move right here, this move basically right here, you would have had to be playing your fibs from a prior move back here. Otherwise, of course, you would have missed it. And you also would have missed this move right here unless you were playing your fibs from a prior move right here. So we're just going to draw another, because we also had on this oscillator move up, we also had change of character and break of structure. So of course, change of character up here, break of structure, boom, boom, up. So if you were to draw your fib from here to here, I'm assuming, now let's say correct me wrong, in order to catch this move to the downside, you're going to want to be entering in between. Let me get in here, zoom in a little better for you. So in order to catch this move to the downside, you're going to want to enter anywhere between 0.68 and 0.71, but if and only if the oscillator turns from green to red. Of course, if the oscillator is still green in this scenario, you do not want to be entering any shorts. So that would be my first question. Do I stand correct on that? So let's just say you caught this move down, right? So you were scalping or whatever, playing, an hour trade, whatever you want to call it. I guess that would still be a scalp. But all right, so say you caught this move, and then of course you watched this oscillator come all the way down, break this right here, and then break this right here. The same goes as follows for this. You know that a reversal is coming, right? So you're only going to be wanting to go long in this area right here between the 0.68 and 0.71. And in this case, we did get a change from red to green. However, money flow is going back and forth here. So there's a lot of uncertainty as to which way the market wants to go. So another question that I have, do I stand correct on those two questions? Basically, once we come down, we're always looking for a reversal up. And of course, once we come up, we're looking for a reversal down. And what would not verify that reversal back down is if this oscillator was to stay green in between these areas right here. That would invalidate any trade whatsoever. And then, of course, if we were looking for the upside, if the oscillator was to stay red in these areas right here, that would invalidate an uptrend. Is that correct? Now, both of these moves, of course, it would have worked out really well. I mean, you're looking here. Let's see, 15. Let's say you got in at this candle right here, 15,107. Up to 15,143. That's a 36-point move right there. So that would have been a pretty good move. My next question is when are we exiting? Based upon what I've seen here, it looks like a lot of times we're exiting when the oscillator goes back to red. But is there a better indicator, better strategy now? Of course, I have a blank chart. Of course, I could put these on, which are going to help. But for example, this move would have also been dictated by, we're basically in the reversal zone. Of course, this move would have been dictated by, okay, we're also in the reversal zone. But when we get into a chop zone like this, is there like a better indicator where, say oscillator goes up 79, but yet doesn't come back below, say, 50, and then shoots right back up? Are we staying in that trade? Or what is the scenario in this case? I'm curious to know what you guys are doing. But if you would have caught this move this morning, say you would have, of course, entered on this, right? 15,107. Your stop loss is going to be 1584. That's a good. What's that? 16,7, 20, 23 points, right? But I mean, if you just would have held this trade all day long, I mean, you're talking what, 300 points on this move. So if you were to get in right here, you just would have held this trade. One thing that I've been noticing as I've been watching is the moves in the oscillator. It seems like, and of course it's simple to say, hindsight 2020, that as long as your oscillator is not getting back below your prior entry, then you're in good shape. But of course that would have, I guess you could have still stayed in this trade if you were in it. But so that's some questions here. Now, of course, the money flow, people were asking about that. I mean, today was a really easy day. Actually, I'm pissed off that I missed out on it, but I mean, we have tremendous green, interacting with the line, back and forth, back and forth, back and forth. Of course, line has since gone down, and it's likely that we're going to be in probably a little bit of a downtrend. But Things get a little bit more complicated when you're going intraday. Like, these moves are really simple, but let me go ahead and remove these drawings. All right, so let's take, for example, let's see here. Like, say you're, all right, so say we're watching this. Of course, we have a break of structure right here. So, if you're going like this to this, like, you're not entering, unfortunately, you're not entering on this move, or these lines not drawn correctly, because here's a move down, you're expecting another up, but yet, of course, in this case, oscillator goes right through the buy-in area, so you wouldn't have entered, and of course you would have lost out on, what's that, 192, say up to 278, so almost 90 points, somewhere around there. You would have lost out on that 90-point move. So what are we really looking at? Is there something more particular that we're looking for, or are we just basically drawing fibs from all these? Or are we just looking for more so of the bigger moves? I put a request in to the admins to see if it was possible that we can actually get a indicator, or at least a way on the oscillator matrix that it automatically would identify a break of structure or a change of character, making it much easier to decipher which ones to get into versus which ones not. Because it seems as if you're just playing, it does work out from time to time if you just play all these highs and lows. Like, you can just come like this. All right, well, we got a high here, we got a low here. All right, great, we got green in between here. Buy. Same thing goes if we're going to be going this way. Let me reverse this. We got a high lows, so anytime we're, of course, you wouldn't know that, but so let's just go back here. Let's just presume that we're going back here, and you can sit there and say, okay, well, anytime we're down here and oscillator goes from red to green, we're buying. And in many cases, it works out. In some cases, it doesn't. But where do you start and where do you stop, I guess, is the question. How much are you guys putting money flow into the calculation? How are you determining where to exit your positions? And do I have all of this correct? There's just been a lot of questions going through this whole feed. It seems like every day there's a new question, and I figured that maybe doing this video would hopefully clear some of this stuff up. Because let's look at another one right here. All right, so right here we have, of course, a beautiful break of structure, change of character. Right, so basically, as you can see, we come up, down, back up, and then peak right here. Now, of course, if you're not drawing your fibs properly, you're like, well, what's going on? So this would be a case where you would have to reverse this. I assume that's what most of you guys are doing. Or maybe you guys actually have two on the chart. At one point in time I did, but it just got a little confusing. But, in this case right here, so after this move up, look in here, and then, okay, unfortunately, we still have red going down here. Yeah, you got a little bit of a move, but I think what would be a determinant in whether entering or not entering this down move, because you're getting what here, 147, 126, so you're still getting a 20-point move. There's no doubt about that. But at this point in time, as I said, hindsight 2020, always looking left. We don't know what's ahead to the right. But a good indicator would have been, stay out of shorts in this case, because look at the money flow, well over the line. And of course, as we go on throughout the course of the day, you're getting big signs of high money flow, and that is bullish. Let's go ahead and look at another one here. So this would be a break to the downside, right? So let's go draw this out here. We have this, we come up, down, we break this, right? And we also come up, down, we break this, and we also break this right here. So now, of course, you would want to be reversing this. And then in this instance right here, oscillator turns from red to green, or from bearish to bullish, and we are in between the 86 and 71. So of course you are buying in, and as soon as you get your first green confirmation in here, buy in, and that would have been a nice move. You would have had a little scary part of a drawdown right there, where maybe some people would have got stopped out. But if you had your stop loss set to this swing right here, then you wouldn't have. But you would have bought in, say, like up here, say right around this zone right here. Of course, you would have had to watch that go down. Some people have been shitting their pants a little bit, but if you just would have held on, then you had your next move up. And then from that example right there, so like what I'm getting at is I'm seeing this work multiple times throughout the course of the day, for multiple ins and outs. But here would have been another one. You would have came up, boom, and then you would want to reverse this, unreverse it. Like, is there a simpler way of doing this, guys? But of course it would have worked out right then and there. You would have got that big move down. And if I do believe on my other chart here, I had this fib. This was actually right at the 0.50. This move came down to the 0.50, bounced right off of it. And of course, we made higher highs, new highs of the day. And then we basically just went into a chop pattern, where we're currently at. We're getting a lot of these zigzags here. So I'm assuming that means that we're pretty much chopping around. Let's take a little bit of a smaller one. Now, of course, we're in after hours, so price action isn't going to be all the greatest. But in this case right here, that was at 720. You would have had, we basically, boom, came past that right there. So you draw your line at the peak right up here. And then what you're doing is basically waiting for oscillator to turn from green to red. Of course, it is red well before 0.86, but you buying in 0.86 here. And in that case, of course, as I said, price action isn't the best right now, but you still would have got a 20-point move. So, I mean, that's good on NQ, 20-point move. You can sit there and do that all day long, make lots of money. But hopefully this video was a little bit informative for people who are still having questions about this, and hopefully it gets my questions answered. But I do think this strategy, from what I've been watching, is like phenomenal. It's just a matter of understanding it better and knowing when to go long, when to go short. But I do think that the money flow is going to come particularly of importance, particularly when deciding which way to go and which trades you're going to enter and not enter. For example, if you're entering here throughout this tremendous amount of bullish money flow, expect very quick pullbacks and then rebounds. So that would be a quick scalp to the downside, and then maybe re-entry at the downside with potential for upside. So let me know what you guys think.